Hi, I'm Keith Boyle. I'm the CEO at Found Gold, and I'm here today to talk about the combination between Found Gold and Maritime Resources. We're really excited by this combination that really, when you think back, you can see how it's greater than the sum of its parts because there are these synergies between the two. Maritime's got a nice little gold mine operation coming into production later this year, and that gold production will help fund phase one of the Queensway project, which we've announced in our preliminary economic assessment earlier this summer, and help fund it, and also de-risks the access to a processing facility that we had assumed in the preliminary economic assessment for Queensway that we would be toll milling that phase one material. And so the two combined really give us a leg up to start production, get into production quickly, start our cash flow, and then move into phase one. Underpinning all of that, which is the real value driver for Newfound, is its exploration team. It's discovered a world-class high-grade deposit, and now we're going to ask that exploration team to look at the Maritime ground, which over the last 5 years has been really hard for them to raise the money and do that exploration that's warranted on such a great package. So I'm quite excited to talk about what's next.
I think you said it all, haven't you?
I think so, Matt.
Right. Anyway, welcome to Beaver Creek.
Thank you.
First of all. Right, so we've got combinations, whatever that means, synergies, we've got access to a plant, and we've got some capital flowing by the end of this year. Okay, Maritime, I know them, I've liked them for a long time, I've liked the CEO as well, but somewhat cash constrained. But you're also quite busy on your own project, so why choose now to do this deal?
I guess a couple of reasons. Being a 40-year mining engineer, operations, that's my wheelhouse. Like that, this is, it's just that really gets me excited.
Right.
Cash flow, seeing the gold port.
Yeah.
And when I look at how Garrett and his team have moved the Hammerdown project, the mill forward, the mill's running fine, the mine is now just getting developed. It's not one of these huge operations.
Yeah.
He's got it well under control, and so well advanced, since advancing the way it should. So from a risk perspective of now having to come in and really do a lot and inject a lot, I didn't see that as a big part of the risk. What I did see was the opportunity to take our exploration team and really come in and now what's next.
Okay.
On that one. And secondly, why do this one? We have phase one that, I think I've mentioned before, $155 million is our capital for phase one. Mm-hmm. And it unlocks really the phase two, because that's what's going to pay for phase two. That's 172,000 ounces. With a bit of exploration success, you add that to, as the feasibility put out there, 50,000 ounces a year, we're now cracking the 200,000 ounce mark, and that's the objective, that's the potential that we see in bringing this combination together.
Okay, so there's also ifs and buts in there. So
of course.
Let's get back to the say people should stick to the knitting initially. In terms of what you were doing pre this combination, you must have got the confidence in your team, the confidence in the data that you're seeing, that your phase one rollout is on track.
It's on track.
And you're not going to be distracted by this combination.
Correct. So
okay.
what you've basically got is you've got an operating mine that is advancing, and next year will be operating, and so really finding its legs. And we're just going to be in the permitting phase, same time. And so just getting the engineering done, that's a different set of skills.
Okay.
And so we've got the team in place that have done both development and production.
Yeah.
And so we feel confident, and not a big stretch.
But my point is, I just want to be clear. You're very clear about your own destiny, that your own pathway, which you've laid out to me a few times now, that you can get there, and then this maritime resources just have to kind of slot in at the right gaps in that.
Yep.
Right. Okay. So let's kind of break down Maritime for people. Like I say, I've been a long-time admirer of both the company and the CEO, but as a reference earlier, they have found it hard or been reluctant to access capital in the market to move things along. And it is a project of a certain size. It's on the smaller side.
It's on the smaller size.
Right. Which is a standalone, as a sort of single asset type investment proposition. That's hard to kind of get over the line. But within your portfolio, you're saying it could be more.
It could be more. We're going to bring, like I said, the exploration expertise, in particular Newfoundland.
And they are next door. Sorry, are you just picking them up because they're next door?
No, we picked them up, one, because we like the asset.
Okay, you got to do that. Right?
And two, it does help de-risk phase one. So it was of the Queensway project. Right. So,
okay.
It does do both those things. Then we had to look forward and say, well, we're going to have to raise $155 million to build phase one. Well, this is going to produce cash to help us fund.
Do we know roughly how much based on their last study?
What was that number? Yeah, somewhere in the 70 million mark.
Okay, so good
in the time we would build phase. Good equity contribution.
Got it. Okay.
So for me, it was looking at that, and with cash flow, then you have easier access to debt markets. Yep. And so a number of advantages by bringing the two together.
Right.
They are next door. It is Newfoundland concentrated. The synergies, we often talk, there's synergies. Well, a lot of times there really isn't as many as people believe, but in this case, there really are those synergies.
So what I want to get to is why it's good for Maritime resource shareholders as well, because using the word combination, I'm not picking you up on this one, but do you know the kind of format of the deal yet?
Yeah, well, okay, so it's an acquisition. We are acquiring them. We're buying them. And
that's going to be voted on?
And Maritime has to vote.
Yeah, so why is it good for them?
And so why is it good for them? One, they're getting a very good premium on their share price. Okay. When we signed the LOI back in July, I think it was about 56% premium. Okay. So they'll get 0.75 shares of Newfound Gold. And with that comes, like I said, the expertise, the upside of our project, because they're getting close to production. So their PNAV multiple now is starting to get squeezed where it doesn't have as much torque, whereas we're still a developer, still some room there. So they're more at the top than we are. And so for them, they've got room to grow from there.
So that's good. What about in terms of their asset? Obviously, getting production is great. Is there a sort of life of mine on that? Is there a production profile?
They've got about a 5 to 6 year life of mine.
Right. So that comes with its own challenges.
And so right now it's let's look at the property package. Let's look at those near-term targets so that we can add to the years, but also hopefully add to the total. In those latter years so that we can grow that operation.
So will they have the opportunity to grow it? Will there be enough? Because you want to obviously take a chunk of that equity, and you want to take a chunk of that production revenue and put it into equity for your own phase one at Queensway as part of that kind of financing stack.
Some of it, yeah.
So you will leave enough in there for them to continue their exploration, right?
Yeah. So our objective is to, not just rest on our laurels, but to continue an aggressive exploration campaign.
Fantastic.
For one, the growth at Maritime, but two, we're still looking for that game changer at Queensway.
Of course, and I'll come on to that. But the exploration potential at Maritime, you feel that's there?
It's there.
Why haven't they done it?
Access to capital.
Right, so
it's really been very simple, that Garrett's been is laser focused on getting an operation up and running so that he could use the cash flow for that to then spend on exploration.
So do they have much exploration team left? Is Melissa and her team going to kind of maybe step over, without getting too distracted, be able to kind of help on that one, or do they have a team themselves?
No, they really don't have a team.
So
It's
they're
really
focused on
our team.
development and
It's
build.
really our
Okay.
team, and with Melissa in charge of that greater team, that'll be the direction that.
Yeah, she knows what she's doing.
Yep,
for sure.
absolutely. We're bringing more people on, and so yeah, I feel pretty comfortable about it.
Okay, so their development build team will remain.
Yep.
And work with your build guys. Say what's the option, because you're going to have to work out what that asset brings. It's a slightly higher grade. There's not a lot of ounces, but it's higher grade profile.
It's a slightly
than
higher
your
grade.
own.
Well, it's higher
So how do you-
grade that they're mining. That's their mine.
Yeah.
We're going to be sending like double the grade, more than double the grade in our initial years. So that's what they have. But we're sending more than double the grade in the initial years to the mill.
From Queensway.
From
because
Queensway
you're doing the
in
high
phase-
pro.
The high
Yeah.
grade core, we're
Yeah.
zeroing in on the high grade core.
So kind of there's some symbiosis there
Yes.
in terms of what's going through the plant.
Yep.
What's the nameplate on that? Or
So there's two plants. So the Pine Cove mill has a nominal capacity of about 1,300 tons a day.
okay.
But it's got Hammerdown coming into it.
Yeah.
They're sending right now permitted for 700.
Yeah.
So we've got room to grow there. Nugget Pond, that asset, what they have is they've got I'll call it the gold plant, the hydromet plant, that is within the mill that Firefly have.
Yeah.
So have to discuss with Firefly what has to happen there, but at least we're in control of our destiny if we have to
Yeah.
on the other side.
So that's exciting for you.
Yep.
Because I could save a bit of time and a bit of money.
Yep.
Obviously.
Yes.
Right. Okay, so in terms of the kind of integration element of the team, I think you're so broadly saying it integrates quite well. Will Garrett be staying on in some capacity?
Well, if it wouldn't be fair to tell you if
Okay.
I haven't really sat down and talked
Okay,
to Garrett.
so there's
about
a
it.
conversation about
That's a
integration there.
conversation that still has to happen. We announced the deal on Friday, and with all these things, once you get to the end, you kind of get to the end. You say,
Yeah.
yeah, we'll talk about it. And so, we still have to talk about all those
Okay.
details.
In terms of the integration of the assets, sounds like you're
Teams
feeling.
themselves,
Yeah.
really straightforward.
Okay, so helps with the recruitment side of the
does.
difficulty of running a business.
It does. Well, look, I mean, they've got a development team that basically built a mill, restarted a mill
Recently.
recently, February, March, and is now developing a mine, a small mine, open pit mine. I go over to Queensway and I say, oh, we have to refurbish, maybe add to a mill, and develop a small mine
Yeah.
in about 18 months.
Yeah.
So
The overlap is
the overlap is fantastic.
Yeah. No, it
The
really
overlap's
is.
fantastic.
Okay, so that whole integration and the execution of that integration plan is you've got the main thrust about.
Yeah.
You'll kind of issue instruction to the market as to what that's going to look like in the coming weeks.
Yep.
No doubt. Now, you obviously got and Tamara Brown. We should also throw in there a great individual when it comes to
as far as the board, the additions to the board,
phenomenal.
I've got great support. Paul Hewitt, the chair, he's a developer miner and has lots of that experience. Tamara just recently added. We worked together at Superior. Chad Williams. So we've got really good. Bill Hayes is there as well.
It's quite good. So I think in terms of for you guys, it feels like you've always had access to since the new incarnation 2.0.
2.0.
2.0 has had access to capital when it
Yes.
needs it. I mean, Chad's obviously a big part of that. But I like the M&A here because it seems like I would be sitting back and going, these guys need to kind of get on with Queensway and shares are going to deliver Queensway. But this sort of came out of the blue. It makes total sense now you said it, but it came out of the blue. Do you think there are other parts of the jigsaw, this organic jigsaw puzzle of yours, which can sort of slide into place to kind of create a bigger, more fulsome picture?
Well, we just announced the acquisition of more exploration ground, which was
Okay.
basically the northern end
Yep.
of the Queensway project from exploits.
Yeah.
We had, a blank spot right at the end of our resources and our mine plan.
Yeah.
Right there, that's what exploits had. So, and it's right along the same trend. So we acquired that ground, announced it. Exploits will have to have their
We're
shareholder
seeing them
vote.
this afternoon. They seem very pleased because that frees them up to do a bunch of stuff they would need to do.
Now they can go
Yeah.
and do what they need to do.
Yeah.
And, it's all about just de-risking and looking for that potential. And for us, right along that Appleton Fault Zone, it's.
But I think an interesting thing here for you, Keith, is it doesn't feel like just land banking for the sake of land banking, which it has in Newfoundland for a long time, whether it be lithium or the gold or whatever. This feels like you're kind of building a machine, and for a future, because you're going to have to keep telling the growth story, right? Once you get Queensway into production,
well, here's the thing. We've got a property package. It's 110 kilometers long.
Yeah, but with that comes
the Abitibi.
Yeah, but with that comes a lot of application of money, right? But
Yeah.
you got to do it in the right sequence.
Yeah.
That's the point.
So first things, let's get the cash flow. We'll be in production. We'll be a producer. We should see a re-rate. We're looking for that into production re-rate, and then go right into phase one build. With a custom mill, we're not trying to build a plant. Or at least brand new permitting on a tight timeline, single asset. That's the biggest risk is when you're single asset and trying to finish and start pouring that gold. I've lived that movie, and that is the most stressful. In this case, we'll have an operation. So look, if there's a bit of a miss, it's not as big stress or risk to us corporately. And then while we're doing that, we're still going to be exploring and adding, one at Maritime and two, looking for that game changer.
Well, let's finish off the exploration. Obviously, you said Melissa and her team can sort of help out with the Maritime assets, which would be great because it can kind of feed their mills. For you guys, obviously, with Queensway, you're still drilling. You're still seeking additional answers. Is there some distraction, deflection of, how do you decide where to deploy your exploration team to get the best possible result for the sequence that you're trying to put together?
I guess it'll be I'll call it the risk reward.
Yeah.
We can see that we now have a 15-year mine life. We'd like to fill in that, I'll call it tail, that triangle, because of the production profile or the grade that we're processing. So you've got that blank at the back. And so once you start getting into year 7, 8, 9, it'll depend on what targets we've got to drill. So to me, it's really, we'll have Maritime. We're going to want to add to and grow the production there. And in our case, at the moment, we're infilling, we're solidifying the resource that's there, really making sure we're expanding it within the footprint with the drilling we're doing, and we're targeting that extra game changer, drop kick target, for example, 11 kilometers away. Yeah. And so now we're starting to see, here's the potential now to start filling in that triangle at the back.
But for now, it's like focus on the money. Focus
on getting to cash flow.
And the end game here is in the range of how many ounces do you reckon at Queensway from the PEA? Remind me.
Well, the PEA, it'll grow from 69 to 72,000 ounces.
Yeah.
And then with the processing of stockpiles, then it drops off. So it's really, we want to maintain that 72,000 ounces a year at $1,100 basically.
Okay. Good to see you, Keith.
Thanks, Matt.
I bet you've got 1 or 2 meetings and one or few.
What's that?
Yeah, you must have a few meetings lined up with one or two interested parties. Yeah.
Back to back.
Great. Well, good luck with that. And
Lots of interest.
Maybe see you before you go.
Yeah, for sure.
Cool.